let's welcome on board Mark Matthews as well. He's the head of investment research at Julius Baer as well. Mark, hi. Thank you so much for making time and speaking with us. Let's start with the market itself. After a long time of consolidation, the Indian market seemed to be breaking out a tad bit. Do you think the worst is over? And now, valuation-wise, there's a lot of comfort available in the Indian markets.
I agree with everything you said. I think that we've had a nice period of consolidation to build a base, and the market is not expensive. And the earnings growth looks very robust in India on its own in absolute terms, but relative to the rest of the world, it looks very good. In the US, they will have at best flat or possibly slightly positive earnings growth this year, but it'll be low single digit. And in India, I think we can safely say it'll be in the mid to high teens.
Okay, so where do you see value at this point of time? Which is that space which would be, let's say, the top sector recommendation at this point of time, Mark?
Truth be told, I don't really go into the individual stocks in India that much, not because I don't want to, it's just that I don't have the time. But I'll cheat a little bit and say that what we like everywhere in the world is quality growth. So quality growth in the United States would mean something like a Apple or a Microsoft. And so you could extrapolate from that. In India, it would be something like Tata Consumer, for example, good quality banks, that kind of thing.
Sure, quite interesting. Also, Mark, just wondering as to what could be the implications on what is going on with the crude market. I mean, not just the sudden jump after, the decision from the OPEC, but also the fact that, for instance, we were just talking with Dr. Fardoon Fisher-Aki right now, and he was saying that he actually sees crude spiraling back to $100 per barrel levels by the year end. So just wondering as to, how is it that you hedge against higher crude prices, considering that's going to hugely impact markets like India?
Well, all I can say is I respectfully take the other side of the coin in that conversation. Our house view is that oil is going to trend back to the 70s. And the reason for that is there's lots of it around. And we view OPEC's decision as a sign of weakness, not strength. And the actual, delivery of 1 million barrels a day, in the past, they've had a hard time executing that. So it's a political move. And these days, politics ultimately are not, I should say, what determines the long-term price of oil. Maybe they did back in the 1970s, but there's so much oil around the world now, other sources, and natural gas, and increasingly alternative energy. And we do feel that long transition of the world's automobile fleet into electric vehicles is the big thing that is going to keep it from going up much. So as I said, we actually see it going back to the 70s.
Mark, the other thing I also wanted to understand is we're almost on the cusp of earnings, and by next week onwards, we'll have, IT earnings come out here in India. Looking at the kind of price action and the news flow that we've seen from NASDAQ, do you believe that IT correction has sort of long overstayed its, due, and we are going to see a bit of a rebound? I mean, analysts largely are expecting that margins are going to expand, perhaps marginally on a sequential basis. Is all the negative now in the price when it comes to Indian IT?
Well, I have to be honest that, once again, if I had the time, I'd love to be looking at it more closely. But perhaps I could answer your question once again more generically. And I think that analysts are going to be paying lots of attention to guidance in the coming earnings season, because in the fourth quarter, the tone from corporate sector was that the slowdown, if there was going to be one, is only temporary, and actually margins held up much better than expected in the fourth quarter. And so analysts didn't really make a lot of dramatic revisions. And so they'll be waiting very closely to see in the wake of this banking crisis whether the corporates are changing their tune or not. And I think it's too early to say, but allow me to just to also mention that the S&P at least has been an extremely concentrated and narrow market this year. If you exclude the 15 largest stocks, the S&P is actually flat on the year. And we think as much as there could be a little bit of mean reversion in the smaller stocks, actually this rally in in those quality growth stocks, the mega cap technology stocks, is probably going to continue, and they will probably continue to lead the market, and the market will probably continue to rise.
Mark, hi there, morning. Wanted to also get in your perspective as to what the expectation is from the Reserve Bank, because apart from tracking, of course, inflation domestically, the kind of central bank action as well that we've seen across the globe will be on top of mind. So what are you working with?
Clearly, the Reserve Bank is dealing with India's inflation and not the inflation in the rest of the world. So I'd start my response by simply saying that we don't think this rally in oil is sustainable. It was mostly short covering. We do not expect the oil price to continue to go up. India's inflation, as you know, is primarily driven by food most recently. And in fact, the inflation basket is in need of recalibration because it's measuring a consumer from the 1990s. And so anyway, we just have to live with that. But to the extent that food prices can moderate a little, I think that would take the pressure off. But for the Federal Reserve, there is a sort of conflict because on the one hand, their messaging is still that they intend to raise rates, but everything else is suggesting that rates are going to start going down as soon as September. That's what the futures market is pricing, and that's what various other markets and lead indicators seem to be suggesting too. On balance, I would think, particularly in light of the stress in the small banks, that the Fed will go on pause and follow the Bank of Canada and the Reserve Bank of Australia, and that would also help take some pressure off the Reserve Bank in India.
Should be a realistic return expectation from the Indian markets this year. We started off the year with very tempered expectations. Has it become better? Is it the same? Is it worse off? What are you penciling in for the annual growth, let's say, from Nifty?
High teens earnings, and I think that we could get high teens return in the stock market as well. I think that the dollar has peaked and it's going down, and that trend is obviously a very good one for emerging markets. The more the S&P just sort of chops sideways or maybe slightly up, the more people will look for alternatives overseas. Kind of like if you remember in the aftermath of the dot-com bubble collapse in the early 2000s, and the S&P was just sort of chopping around. That's when a lot of money started coming out to Asia. And I have friends who run a fund management company, and I'll just share with you some feedback they relayed to me when they were marketing in the United States last week. They said that investors in the United States were willing to dabble a little bit in China, but just a little bit. They didn't want to put in very much. And so I think that opens a lot of space for other large emerging markets like India to attract attention and money.
That was the comment coming in on China, wherein they're willing to dabble a tad bit into China. But what about India? Does it stack higher than China? Is it still lower and people have just started looking into India? Because as of now, the flows have turned slightly better, but for the year, we're still tracking very, very tepid flows from the FIIs.
Well, I don't want to ramble, but it's a very long answer because you have to realize the interest in China up until 2019 was very much concentrated in their internet apps like Tencent and Alibaba, Meituan, etc. And that story has been totally derated, but now it's kind of starting to look a little interesting again. I mean, those stocks are trading in the low teens price earnings wise, and you might have seen Alibaba's been cut into 6 pieces, which will probably allow those individual pieces to grow again at a faster rate than they could have in aggregate if they'd stayed as one conglomerate. Then on the other hand, India doesn't have those same big internet stocks, but it does have this very robust and young domestic consumer story. So they're just very different stories. But overriding all of it, I would say in conclusion, the geopolitics is not looking good for China, and that's the major restraint, I think, preventing foreign investors from putting a lot of money in there is the fact that relations between China and the U.S. are literally as bad as they've ever been. You've got to go back to the 1960s.
Fair enough. That's the view on India, China. But what about, really looking at the long-term story back home, in particular when it comes to the infrastructure pocket, given the kind of impetus that we've seen, policy initiatives, etc., by the government, a lot of market experts are betting big on the manufacturing theme in the country. Would you too remain positive here?
Yes, I do. And of course, infrastructure is a story which requires a stable government. And so that is the case in India. I don't see it changing with the elections coming up next year. And as long as you have continuity in government, then these long-term spending plans can be executed. And so, yes, I am a believer in that story. It's a good one.
Sure is. Mark, great to have you today on ET Now. Thank you for taking the time out.